Man, okay. Oh, hi, everybody. It looks like I cut in a little bit earlier and rubbed us in really quickly. You can say hello,
Perfect.
Maddie. I'm
Hello.
sorry.
Hello, everyone. Welcome to this week's edition of Vishal and Company. Today, we're going to be talking about earnings from big guns like Facebook, Apple, Microsoft, and Galen's all-time favorite,
Oh, no.
Tesla. We're going to cover the Fed's interest rate decision, what is going on with crypto price action, and finally, the Robinhood IPO. We have a lot to go over today, so we'll just jump right into it, and I'll pass it over to Vishal.
Thanks, Maddie. So, just as you said, so much. It was just a crazy week, really big week here for markets. Quick rundown on the charts. These 5 days, that's all that happened this week. Even though we had a lot of data, we hit new highs on Monday, and then basically we've just been ranging. It's been sort of a dull week, actually, in terms of price action. A lot of volatility, a lot of choppiness if you're a intraday trader or day trader. But maybe it's the summer, or maybe it's going to take some time for the market to digest all this stuff that came through. So let's start, let's just get to it. Earnings, Maddie mentioned, huge earnings week. We had, AMD, Apple, Microsoft, Visa, Starbucks, McDonald's, Ford, Facebook, Amazon, Caterpillar, Exxon. So just big companies. Pfizer, Moderna, AstraZeneca as well, all the vaccine companies there. So huge week. Oh, I forgot to mention Tesla, but they're there too. Really big week. Before we get into earnings, though, let's just quickly cover the Fed. That was on Wednesday. No interest rate change, of course. If you guys want to see the difference between what the Fed said this month versus last month, CNBC put this out where essentially it was the same statement from last month, but they've just crossed out a few things here and added a few stuff that's new. And the big difference is basically the Fed is now saying that there is some progress in the economy, and the market and investors are now thinking, oh, okay, that means tapering is coming soon. Because remember, the Fed said that they're thinking about tapering. We're not there just yet, but the Fed is saying that their goals are being met or soon are about to be met, and maybe we'll start talking about that sometime down the road. So it's more of this, they're just pushing things down the road there. And yeah, it's funny because the day after we heard that, okay, the economy is progressing. So, okay, the Fed is right on that part. But then GDP missed expectations. It still came at 6.3%, but most analysts and economists were expecting 8.4%. So that's actually almost a 2% difference there. So it's a pretty big miss on that front. And then jobless claim still coming high. It was 400,000 Americans who lost their jobs on the week ended July 24th. So we're still quite high. And just for people that want to compare, pre-pandemic, these numbers were less than half of that, right? It was where was it? The number is double the pre-pandemic norm. Missed analyst expectations. We're expecting 380,000. So now people are saying, okay, the Fed is saying the economy is progressing, so they're going to start to taper soon. But wait a minute, how come the data is coming out like this? So does that mean the Fed is now going to say the economy is not progressing as they want, and they're going to keep cheap money low going forward, right? So this is what we've been talking about. The market is still
There's too many black swans flying out there at this moment. The Delta
and then today,
variant.
yep. There's
It's
the Delta variant, and there's also inflation numbers in the PCE, which came up a decade high as well. So, that's the Fed. People are still gonna be entranced on every single word that they say, and I still believe that there really isn't going to be an interest rate hike because I think with all this debt that's coming, and we heard that there's more. I think there's another $1 trillion infrastructure bill coming down the line, or they're
yeah. They
voting on
finally
it.
shook hands on that one.
Yep. So I mean, when you raise interest rates, that means more interest payments for governments as well. And with all this money, I don't know if they want to do that, because if you charge them more interest, they have to increase taxes, and that will slow things down again. So I just think the Fed is sort of pushing this down the road, and one day the market's going to call the Fed's bluff, right? By saying, hey, you guys aren't actually going to raise interest rates. You're just leading us down, or like lemmings towards a hill or something. And that might be quite volatile for the markets. What was volatile for some individual stocks were, of course, earnings. And before we look at Teslas, because I know, Galen, you have a lot of stuff to say about that. Amazon, I think, was a big one. That was a surprise, and it's a bit funny. I mean, look at the gap down, folks, that Amazon had on earnings. They're trading at $3,600 yesterday, and this morning price opened at 3,347. So it was a 6%.
Didn't they miss expectations and have a lower projection coming up?
So they missed revenue expectations, and this is the crazy thing. I mean, like they're making over 100 billion per quarter, and that's still missing expectations. So people are sort of laughing at how, like, oh man, this company that makes that much revenue, and you would never have thought, like, a few years ago, numbers over 100 billion per quarter would be bad. But
if you take what the fraction of that's actually profit, I mean, it's still we pay a lot for that revenue.
Yeah, and I think a lot of it, like we mentioned in the past, is more due to the AWS, right? The Amazon Web Services, their cloud stuff, cloud services. So Amazon, that affected the markets quite a lot. And I believe we discussed this last week, but we mentioned how the big thing for earnings is not necessarily how much they're making, but the forward guidance, right? What are these companies talking about for the future? Are they worried about inflation? For example, Hasbro, the toy company, was saying, our costs are going higher. We're paying 4 times more now for freighting, to deliver things on ships and stuff, and we have to raise prices in Q4 this year on all our toys and all our products. So a lot of these guys, they're still uncertain, right, with the whole Delta variant and supply chains and stuff. We heard Amazon canceled their Prime Day in Canada, like that's official now because of they don't want to get their workers. I guess they don't want them to take too much risk, and I'm thinking it's likely due to supply chains rather than that. But there's that as well. So the forward guidance, it wasn't the best. People are still uncertain about the future, and I think that's a bit worrying and playing on the markets. But Tesla, do we want to talk about this, Galen, or?
Let's touch it. Well, okay. All right. We'll talk about it a bit.
Okay.
They had and then I got my fingers up so you can see it. They had a great quarter where they earned, again, I'm going to use this $1.1 billion in profit. And realistically, as a car manufacturer, that came nowhere close to $1 billion. And quite honestly, I'm quite tired of this whole idea of monopoly design in regards to these companies. Everything that came into that company was a combination of tax credits. It was about $384 million, almost $400 million. And then also about $800 million in revenue from their energy sector, which hasn't made money until this last quarter. And I don't understand how they're able to book all that revenue and profit, because basically that revenue for the energy sector cost them about $711 million. So it's not a whole hell of a lot. So basically what should have happened is that the energy unit should have been a negative on their balance sheet, but they flipped the books around a little bit, because the story is that much of what they've promised to actually deliver can't be delivered in 2023. And I don't understand how you can actually write down the revenue from a sale that you can't deliver on until 2 years hence. That doesn't make sense to me. Of course, I'm just an idiot. I'm not an accountant. I'm not the gap guy, but on the surface,
accounts receivable, that's what they call it in accounting.
Yes, exactly. And it's just it doesn't really make any sense to me that you'll be able to count something that you can't come through on for another 2 years. Which leads me to wonder, what are they going to do in another 2 years, right? When their actual offering is leveled off. There's also huge indications that even though, like, most of the quote unquote profit was generated this year by them stopping the production of about 20,000 vehicles and sending out the more expensive ones instead in order to bump their valuation. So it's just, He's playing with the books right, left, and center with this company. As a car manufacturer, it's on its face in terms of actually performing to what market cap is right now. And it will never hit what the market cap is right now. So that's really unfortunate. We're in a position where there's going to be so many people holding that bag come probably even next year when everybody really enters the market. There's other products out there. There's other types of batteries out there. There's other types of vehicles. Toyota, I mean, it could be said that, sorry, Smith. All right.
Tesla did announce that they're going to be raising prices in the U.S., but
Yeah.
they're cutting prices or keeping prices steady actually in China, hoping to focus on the Chinese market there. So that came out.
Which basically is just clawing for profit at this point in time and trying to scramble for market share. They have a real uphill battle going in China. They have a major competitor, Xpeng, and a bunch of other companies, and the market itself isn't necessarily conducive to what they have to offer. And in any sense, no market is at this point until they can come up with an economical vehicle. They're still selling luxury vehicles dependent on subsidies and suckers. And so it's just, we really need to upstep the game. And he's the reason why he's stepping back is because it's not happening anymore. I'm sorry. I'm going to stop right now just because I'm starting to bubble a little bit and I'm losing my train of thought. So I don't think Tesla is a good bet at this point in time. I think he has been padding his books, and now people are beginning to realize that, let's say, Amazon and Tesla in and of themselves are not performing the way they should be. That's it. Is the age of marauding monopolies over? Hopefully. I don't know. What do you think, TK? I'm going to get off this mic.
It's I think it was 2 days ago or yesterday. The Nikola guy, I don't even know his name.
Yes, the CEO.
The CEO came out on 3 accounts of securities fraud and cooking the books and misleading the public and all this. Essentially the same thing we're ridiculing Musk for, except he's actually been taken to court for it, and they've seized his assets tied to the business, which is like $1 billion pre-IPO and stuff like that. And this is the same thing that people are accusing Tesla of. But what I find interesting is nothing happened to the stock. It's still at the same valuation point that it was previous to them talking about this. So it's like that's the kind of market we're in right now, where the CEO will be outed for literally defrauding investors, and the company is still and people saying the judge was like, you misled and used false information in your reporting, and for that account you did it just for yourself to get rich or whatever, and the market didn't really react as it should. So now I think of like Tesla in that situation where he's a bigger name, and if they had to take him to court, it's going to be a bigger fine, and there are going to be bigger fines because he's in so many different industries. What I'm scared is the market probably won't react the way it should at that point. They'll say, oh yeah, he defrauded us and probably made a few lies here and there, but it's okay. It's still the future.
Do you think Elon Musk is too big to prosecute, though?
I think so at this point.
I think they stayed away from him mostly because he now comprises a majority of sort of the SPY.
Yeah.
Right.
That's right.
Yeah.
They can't afford to punch him in the nads at this point, because basically he'll take the whole thing down with him.
True. It was like, I don't know the percentage ownership that he's in the S&P, but that means if they delist him or remove him from the S&P, that's a bunch of mutual funds that people's pensions are in that they have to remove, and they have to consider that it's a big hit on the market. Unlike Nikola, where it's not even in the, it's not a big weighing in the index. So I was like, if same thing happens to Elon, there probably won't be a big enough effect if the sentiment is still so strong that he's this, Lord and Savior kind of thing. Mm-hmm. So it's kind of scary to know that that's the kind of the market we're in, where your CEO is outed for fraud,
right?
But your company can still have a market valuation of 5 billion or whatever it is today.
Now, question
Yeah.
with Tesla and Amazon and this stampede of unicorns and private equity, like Maddie, what did you think about the whole Robinhood IPO thing?
In what regard?
Well, were you excited? Did you think it was a wonderful thing? Were you wanting to get involved? Or was it something that you went, what the fuck, and kind of backed away from? Like, what was your idea on it?
I did not get involved at all. No, I was not interested, to be honest. I don't use Robinhood, so I was just like, I don't know enough, you know?
So
I have my little Wealth Simple trading account, and that makes me so happy. That's what I would always recommend.
Do you use I guess a bot to sort of help you trade? Is that how it works in Wealth Simple? Or do you make your decisions? Or what do you do?
I make my decisions.
Okay.
Yeah.
Mhm.
What do you feel about the whole automatic, getting it served to you? Do you feel comfortable with that?
I don't like that personally. I like feeling like I have a little bit more control.
TK, question to you.
The
yes, Robinhood IPO. you tell me how you feel. Don't spare any words.
I hate them. I hate everything they stand for. I actually want to read something from their mission statement, and I find this pretty interesting. But it tells you if you have billions of dollars and an IR, an IP team, an investor relations team, you can say anything and get away with it. So this is what they say on their mission statement, and their mission is to democratize finance for all. Okay, and they continue to say, we are proud to serve this next generation of investors, and it is painful to see them continuously lambasted in the news reports. Anecdotes of people winning and losing large amounts of money garner more attention than more pedestrian truths. The majority of our customers prefer to buy and hold. With our recent investments in education through Robinhood Learning, and along with new features like drip and recurring investments, it's never been easier or more delightful to build a portfolio and invest for the long term. Some pundits deride individual stock ownership and say that people should only be investing in passively managed funds through an advisor. We reject this, and we believe that is important, not just for investors, but also for the broader markets to be able to own stocks directly in the companies you love without any middlemen. The results so far support this conclusion. As at the end of March 2021, our customers had seen appreciation of their assets of approximately $25 billion. While markets go up and down and things may be different in the future, this tells us our product is profoundly benefiting everyday Americans at a time when we need it the most. This is slander at its highest peak, where most of your people are buy and hold, as they say on their books, but we don't know their definition of buy and hold. I know most people on their accounts in the US are definitely trading options, and I don't think you can day trade on Robinhood, but it's mostly options, and most of them are short-term options and all this, and they just completely discount that in their own mission statement. And if that's the broker you want to deal with, which is a middleman in itself, I don't think I don't like the fact you masquerade as a place for efficiency and long-term investing when you're actually a casino,
Totally.
And that's what I feel about it.
I got 3 quick points here. So, everyone was arguing about, is this a good buy on financial media and stuff? So if you're looking at the numbers, first of all, their company, as well, many IPOs, they're not making profits at all. And the ironic thing is, the more customers they sign up for long-term investing, the more money they're actually losing. And as TK just said, options trading, that's actually their biggest revenue. They're actually their biggest revenue stream. And it's funny because it's contrary to what their mission statement is, and not only that, it's sort of against the best interests of long-term traders, right? So they try to encourage people to trade options on a daily basis as much as possible, because that's how they make their cash. And then finally, the third point, and Chris actually wrote a nice piece here about buying Robinhood, and a lot of comparisons are with Charles Schwab, right, which is sort of the other big broker there that's also traded, and Robinhood is worth 1/4 of Charles Schwab in terms of the market cap, but the average account on Robinhood is $4,500, whereas the average account on Charles Schwab is above 25,000, right? So it sort of tells you that the people on Robinhood aren't necessarily the long-term holders, right? You're with a count of $4,500, most likely they're playing options. No one really
they're more likely to invest in GameStop.
Yeah, that kind of stuff, and no one really encourages people to go to Robinhood to in America it's 401ks, right? So no one's really putting their 401ks in Robinhood. They're generally doing it through Charles Schwab or some other well-established brokerage. So I was snickered when TK said that a lot of they're focusing on long-term investing.
Long-term investors. It's also when they talk about their commission-free trading, man, that's a lie in itself, and it's in the document where they make money on the bid and ask spreads a lot of the time in the US. Yeah. So they make money on that spread. Obviously, for like general stocks, it's for Apple, the bid and ask spread is a couple basis points. But if you trade the options, there's a wider spread between the two prices. They make money from front running or selling their clients or their long-term investors
preferred stocks.
Yeah, they sell that to middlemen. Funny enough, other investment advisors and stuff like that. Their biggest client is I forgot the name.
Citadel, yeah.
Citadel?
Citadel, yeah. Citadel. When it comes to, and I think they were in the GameStop debacle, I think, or one of the short squeezes. And they have other various things that make it seem like you're commission free, but over time you're actually being charged more than the actual like Charles Schwab or Interactive Brokers or whatever account you use. So I'm like, at least if the main goal, I get business is difficult, and the main business model is to help, but don't masquerade as Robinhood when you're actually a casino yourself.
When you're robbing from the poor to give to the rich.
Give to the rich. That's what I don't like.
Now, sorry, no, go ahead. Finish your thought.
No, that's it. I was about to get vulgar, so I think I should stop there.
Okay, well, shitty business plan and deceptive business plan aside, my problem with Robinhood is of this recent spate of unicorns that are entering the market fueled by private equity and SPACs, and basically ripping off the retail investor in order to give all these other people money that's never reinvested, never really put into the market or into the community. It just returns to build wealth. And I think this is something that is hindering the market right now horribly. Every time I see somebody getting $1 billion round, I want to scream, because if you're not public and you're getting that kind of money, like, where is it coming from and why? Because you obviously aren't performing for $1 billion. Who's giving it to you, and what do they expect in return?
That's true. There's this weird thing going on right now outside of the public market, but in the private sphere, where there's so many weird deals. Oh. If you look at the deal list this year, it's higher than last year, and the transaction volume is also higher, but the quality of the deals is questionable. And it's kind of like a lot of these private equity guys and these let's not even call them private equity, private debt, to be honest. They're taking up a lot of these cheap loans and then pumping them into companies. And for example, there's one last year. It's called Party City. It's a retailer. It's losing money and it's losing market share. but the private equity firm bought it, made it private, chucked a bunch of debt, changed management, did some stuff, and blah, 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 and then chucked it straight to the secondary market again and advertised it to retail investors as the brand new retail, taking this business model, blah, blah, blah. It did great. And then obviously, as things go, it didn't perform after that. And there's a lot of these deals that are coming out from private equity. And people are like, okay, this is weird. Why are so many of these deals not working? Are they not going through the proper due diligence to make the highest quality companies come out? Are we at a point where there are not that many great ideas from companies that anything with a heartbeat is being funded with billions of dollars, and then when it comes out to the public market, people are not really being told about the pure risk that's coming through. And I think it's a disservice to the entire market if a lot of this continues. And it goes back to kind of what Vishal was talking about earlier, where the Fed is at a point now where it can't stop this, party. The party has to continue going on. And unlike China, where if they want to stop the party, they can stop it no matter what, and they don't really care what happens. The Fed doesn't have that freedom to do that, and that's the scariest thing about it is in the public space it looks okay, Amazon, except for Amazon dropping 7% and all this. It's the little private deals and the small businesses that are coming out that actually have nothing behind them. That's why I think it's pretty scary.
I got you. We've got a viewer here who's just made a comment. Wall Street is absolute trash. This is Tofik H. I hope I pronounced that correctly. Wall Street is absolute trash. They don't want retail traders to kick around. I know it says hodler. I can't stand that term, and I apologize. But hold AMC until they wake up. What's your viewpoint on that?
Well, I think I need a lawyer to say anything about those companies at this point.
Well, no, seriously, what do you think? Come on, tell me. Come on.
I think it's tough. Yeah. I think it's all trash. Man, I don't know what it is about greed in the market and envy that forces people to believe in such malicious causes. Like, okay, you're going to damage a few hedge funds. That's great. But a bunch of others are just going to come. The market is a place of crooks a lot of the time. And destroying AMC with a market cap of, what, a couple $1 billion won't really do much for the entire market. It's just one company that's going to go bust compared to everything else that's going on. So I like the cause, but it doesn't really help it when you're going to Robinhood and buying AMC on their platform, giving them more money, fueling the same jet engine to do the same thing. That's my view on it.
See, the thing is, like, if we were in a fair market and we actually did create a short squeeze, I was looking at the math, and yes, AMC could actually be over $100 per share if that short squeeze actually happens, and if markets aren't messed up. Like, if you look at the numbers, it's actually possible. The issue is, though, you have that, right? You have the 79 million shares short. The short interest is still high. And I'm assuming that's probably still a lot more institutions battling the retail guys. So it's about taking that up. And as you can see, the short shares actually increased, right? So it's possible, but you have to create that short squeeze. But how do you do it, right? That's the issue. You need that catalyst. Sure, you can get everyone to buy. Maybe if governments start giving stimmy checks again, then maybe you get people to buy up again and cause more short squeezes. But
now, my question is on the short squeeze. If we were living in a fair market, there would be no reason for the short squeeze as far as I could see. But the other thing is isn't the short squeeze just about as short term as anything else? Because once that's over, you've got to now depend on a company, and you've got, unfortunately, in order to commit and complete the short squeeze, you're going to have a shit ton of fucking bag holders that are going to be left holding the bag when the company fails to perform past the short squeeze.
Well, the thing is, that's what I'm saying, right? I'm sure our the guy who commented is a trader, not necessarily an investor, right? So there's a difference between investing long term and trading. Like, I have no problem trading AMC, right? If you're holding AMC though as an investment, that's something else, right? But if you're trading AMC, GME, Dogecoin, that's fine. You can do that. Anyone can, trade that. You can make money. But as you said, right, you have to get out, right? It's not something you sit on and put in your RSP or TFSAs, right, and saying, hey, I'm going to invest. And yes, there are a lot of, bag holders, right? I have a lot of people who were buying GME close to $360 because of the hype, right? The social media hype, and they're the bag holders, right? That's why, I always say you never really want to jump on the FOMO. When something's, something's going, when there's FOMO, you've already missed out. Don't jump in, right? But that's just our natural, I guess, human nature, right? A lot of people get emotional and they're like, we're missing out. Everyone's making money. My best buddy bought one share and made a few $100s or 2 shares. And I got to jump in to make money because it's so easy. So that's the rules, right? Trading and investing are two different things. I have no problem trading GME, right? Or AMC, but you have to know when to get in and get out. And that's where I believe technicals come in and where experience looking at market structure comes in. But yeah, as you mentioned, right, as an investment, is AMC worth the market cap of 19 billion? I don't think so. But,
I knew it was getting bad when I went to this was when it was 300, the second time it popped back up, GME. And I went to the bank to replace my credit card. I had lost my credit card again. And I was standing in the line. So this is middle of COVID, so we had to do the, social distance.
Right.
And there was this, I would describe him as this eccentric guy behind me, no mask, speaking loud on his phone. And he's like, yeah, I just bought some more call options. And I'm like, oh my God.
It was the same thing with cryptos. When the first crypto boom happened, when I was like a bit younger, but you were on the bus and every trendy type person who's never probably, who was getting into the markets for the first time were on their phones yelling, oh, I just bought 5 Bitcoin, man, right? Like they're trying to make money. But the best thing to do is like you go to your local Starbucks and when you hear those people talking about stocks, you short that stuff. Right? That's what you do.
Okay, I've got another question here from Z Gates. What are some sectors you guys are into for long term that aren't so slimy? I admit I've been sucked into some meme stocks lately. Seeing other people profit off goofball assets drives me nuts, and drives me nuts too, dude. For me,
that's a good question.
Yeah, I'll let me just quickly start, and I won't get into huge detail. I'll let. And he made another comment. I find it hard to imagine that stimulus checks made much of a difference. A few weirdos with $1,000 each seems tough to imagine that having much actual impact. Z, you're right in a sense. If you've got a cumulative effect, though, across the board of everybody using that $1,000 to buy in, then it does actually have an impact, somewhat, at least, anyway, and especially in the FOMO stocks.
I'll throw in something there though. There's a lot of people though, like that agree with Z Gates that it seemed very fishy. That a lot of people think that was actually institutions making that move, and it's likely true, right?
I'm sure it was. Well, the problem was the stimulus checks provided the sheep shearing material. That was basically it. The institutions were the one to make the money off of that whole thing. So basically, they seeded the capital that was taken away from them, and the institutions just went and took it back. Because it's basically, when you're playing it like that, it's like a casino, and the house always wins. That's basically it. Now, if you're looking for stocks that are, or sectors that aren't so slimy, you got to start looking for the shit that isn't sexy.
Yeah.
You have to look for the stuff that's fundamental. For instance, I'll say it again, United Rentals. It's, about as unsexy as you can get. But these guys work in construction and cover over everything. Right? So basically, when there's construction going on, they just keep on going up. I held on to them since the beginning. My portfolio is completely unsexy. And with the exception of the beating I took with NVIDIA, I'm up 400 grand. So I think there's something to be said for buying and holding and finding something that actually has performance rather than pomp and circumstance.
It's a pretty sexy portfolio.
Yeah. Exactly what Galen said, right? Look at things that people aren't buying. And for me, that's actually agriculturals and commodities. I think commodities are very cheap. I mean, oil is actually already running up. And I think it's actually going to go higher. But maybe I wouldn't look at oil per se. I would look at, other natural resources. But I think agriculture, you could read my piece. I was on that about weather change and crop failures, and you're already seeing drought now in California and all that kind of issues and supply chain issues perhaps. But I think, agriculture is one that has a lot of fundamentals that are positive for it, and it's not a sexy sector. No one's really looking at it. You're hearing about coffee, right? I'm not sure if people are coffee drinkers here, but coffee prices are just shooting up off the roof right now. And it's not the highest it's ever been. We can still make those, but it's like due to, I believe, like permafrost now in Brazil or something, right? So I think, agriculture is long. I love that kind of stuff. And, you can buy a lot of food stuff. I think there's a difference between, long-term and swing trading if you want to trade, right?
Yep.
I like things like Loblaws, which is now making all-time record highs. They are always paying dividends. People are always going to go buy food. Even if there is lockdowns or something, you're going to be going to the grocery store. And, these type of things, as Galen said, right? It's not a sexy portfolio. It's just a few stocks that, people are going to buy and spend money on, and the company's likely going to be here 10 years from now. Throw some money in every month, right? $100, $200, whatever you can afford. And, if they pay dividends, that's even better because that's sort of what you want, right?
No, yeah, totally. And Z just made another comment. It's more than just missing out. It's the frustration of being cuckolded while some clown profits for no good reason. And it is. I understand that. But I think to a certain extent, in order to combat that, because that's what drives FOMO, that's what makes these meme stocks run. You have to start looking at the stock market. Now, you can split your portfolio. I would say the majority of it should sit in long-term and stay there. Don't mess with it. Don't even look at it. Just know that you've made a good decision for the most part, and you're counting on the next 20 years for it to perform, and leave it alone. Now, if you want to take a small amount of money, take the amount of money that you can afford to lose entirely.
100%. Yep.
And then play the market that is a more speculative factor. And my thing is, don't ride the popular shit. Start to look for stuff that's cheap and on the rise, right? And then that way, if it does go south, you still haven't spent a lot of money, and the money you do lose is not going to be substantial. However, if it does gain, then you've got more profit than you know what to do with to a certain extent compared to what you invested. Look for long-term stuff if you're wanting to sort of really kind of get formative with growth. For instance, water companies. There's an oncoming water crisis. So start looking into companies that do purification, transportation, all that kind of stuff. Food crisis as well. Not only just the retailers and grocers. You may want to start looking into companies, and not Monsanto for Christ's sake, but into companies that are making advances in food production, or new ways of food production, or new ways of like new types of food, like even growing meat in a laboratory, because meat inherently costs way more to produce in terms of what it actually comes out with. Like thousands of gallons of water, whole bunches of land, right, for just 1 pound of flesh, basically. I'm a meat eater. Right. But I understand that it is not sustainable nor equitable in that kind of an economy. And eventually we're going to have to face that fact.
That's true.
On that note, I have to cut us off.
Oh, God. Did I go that long?
Not you, the whole team.
Yeah,
the whole team went a little long, but it's good. Thank you so much for tuning in, and we will see you next week.
Awesome. Thank you very much, guys. Thanks, Z Gates. Thanks, Tofik. Thank you, Jasmine. That was a lovely little thing, giving us a thumbs up. That was very nice. We'll see you next week. Toodaloo, toodaloo. And have a great time, and try not to let the world fucking cave in on you. All right. There we go. That's my happy message of an outro. Take care, kids.
Inspiration.